Welcome, everyone, to another RLT Pivot podcast. Thank you all for joining us. My name is Tracy. I'm one of your co-hosts. And before we get started, just a reminder that if you find value in what we are doing, please hit that subscribe button, hit that like button, and don't forget to hit the notification bell. In today's episode, we are going to be talking about catching a falling knife. The chat is open. If you got questions, send them over our way. Dan, how's it going, man?
Tracy, first of all, glad to have you back. This is awesome.
Good to be
go
here.
solo. A lot of pressure. I was sweating last episode. You're back. I love it. Awesome. Thank you for joining me. And Tony's in the house. We got Mr. Kevlar Hands himself is here. Tony, if you don't mind, just introduce yourself. I know a lot of people in the real life trading community, they know your greatness already, but perhaps maybe some people outside the community have no clue who you are and they need to know. So could you just tell them a little quickly about yourself?
Yeah, so I'm Tony Pawlak. A full-time trader is all I do. I was one of those crazy bunches that had a good normal job and decided to quit it. Thought I could do, just trade the markets full-time. Didn't really know what I was doing. Got it handed to me, stuck through it, made it out the other side, and now I just spend every day trying to help people along that same path quit their jobs and trade full time and enjoy the blessings that come from it. So that's me.
Awesome.
Yeah. That is awesome. Well, I mean, today we are going to be talking about, like I said, catching a falling knife. It is huge, I think. One of the things that I see as a phenomenon, the prices are going up. Okay. And every single time I hear, oh, if it gets back down to this price, I'm going to buy. When it gets to support, I'm going to buy. And then when the price gets down there, we all chicken out. Now, we're notorious for it. Everyone's done it. Everyone goes through that issue. Like, let's talk some psychology around that. What do you do to prepare yourself for actually pulling the trigger when the prices get down to those low spots?
Yeah. Like what you said, having a game plan beforehand. Planning the trade out. When your emotions are already crazy and you're thinking about getting in and you just thought about it 5 seconds ago, it's really, really tough. Most of my trades, like my longer term positions, swing trades, when everything's fallen through the floor, I've already been planning buying this level for months. And so that makes it a lot easier. I set an alert on my screen, on my chart, and when that alert goes off, my only job is to follow my plan. And my plan says when that alert goes off, I'm buying this, and that, right? So it takes the emotions out of it. It's still scary. It's still, the daily chart looks like death. And I would say number 2 is having the right expectations. I think too many people think they're going to buy to the penny bottom, and that might happen once in a lifetime. But for me, I plan on being down. I plan on being negative in my P&L for at least 2 or 3 months. Just plan on it, write it in. So I don't care if it goes lower. That was part of the plan. And I have my risk set. I have certain things that I do with my risk that help offset that and give me a little bit more ease at night when I'm sleeping. We can go into a little bit later. But I have another plan of what to do, right? Legging in, how to hedge certain ways. So I'm managing my risk, but mainly just that mentality of, look, I didn't, mortgage out my grandma's house to put on this one trade so I can't sleep at night, right? It's a set risk, and I plan on losing money for the next 2 months on it, right? But in 9 months, that's when everyone looks back and goes, oh, if I could have just bought Tesla at that. I'm saying I did buy Tesla at that, right? And I didn't lose my mind over the last 2 months that I was down, and 7 months later, it's cranky, and I'm glad I'm in it.
What a concept. But when you started out trading, when you first started trading, were you always that type of trader? Were you more of take a breakout? Like what switched in the way or style that you are trading now compared to when you started?
Man, that's a great question. That was kind of fun messing around with these things. I don't know. It's just, I would say my evolution, as I put more and more hours back trading in, thousands of hours back trading, my eyes catch certain trends. And I've realized, and I'm going to share a little secret. That's not a secret, but it kind of is a big secret. Using the monthly charts on pullbacks, and we'll talk some more about that too. but finding support zones off of a monthly chart and setting up your buy areas on those. So it was just, honestly, it was a lot of back trading. I started out just day trading, got it handed to me. And then I found credit spreads, started making fantastic money with spreads, and that's all I ever did. And then I started to, once I finally had a good cash flow coming in, and I wasn't just trying to survive and pay my mortgage and not lose my house, once things finally started taking off, I was able and had the time to be able to go and back trade other strategies and just trying to mainly learn how the markets work. So that's what I would say, Dan. It was just a combination of putting the time in, understanding a few things, but my eyes just kind of caught a little hint of, hey, this could work. This strategy might just work if I do it in certain ways. And it's been paying off ever since.
So are you always just focusing on kind of monthly support resistance, weekly support resistance, or do you use any kind of indicators or tools to determine whether or not you're at a low?
Yeah, definitely. My indicator is volume. I don't think I could live without volume. The RSI that's my best friend. RSI is what I use a lot. And just price action. So I love to read the sentiment behind the candles. I am looking, right, there's different setups. If I'm day trading, I'm looking for that trap. I am looking for the noobs to jump in, but like, now that we've gone down 80,000%, now I'm going to short this thing. That's the move I'm looking for on the reversal. On a larger time frame, like you said, I'm already planning ahead. I've had my level set for months now. I'll tell you right now, my level is 350 on the SPY right now. And everyone's like, well, that's 20 or 30% away and it's never going to come. And it's the same thing they said about Tesla, why I bought it at 550. It's never going to come back down. I'm like, well, probably not. I literally have thousands of alerts on there that are like 200% away from the price, that were 20% away, that it's gone away, and it'll probably never come back. Who cares? But yeah, just depending on the setup of what you do, I have a different way of going about it. But if I'm looking at grabbing the bottom, those indicators help me out a lot. The RSI, volume, and then just trying to read that sentiment, putting people behind the candles is what really helped me out.
So are you saying that you're okay missing trades?
Wow, that's a concept, right?
That's so weird.
That took
anytime anybody talks about a stock, I kind of want in. So that's pretty fantastic strategy that you have. So, okay, so if something is coming down lower, right, and your strategy is maybe I shouldn't pay the highest price for this stock, or maybe if like the stock's at 100 and it drops 1%, maybe it could go down to 2% or 3% or 4%. But if you're buying low, and that is a scary point to buy, because that's when you probably have some news cycle coming out, CNBC's blasting it, you got all the analysts downgrading, and Tony's like, no, this is me. So how do you manage the actual risk on that trade? Like where do you put your stops? When is, like, what if it goes to zero? How do you deal with that?
Yeah, that's a great question, Dan. I solve that by trading just options. I don't trade shares. And I trade options because it gives me an absolute zero setup. Whatever you pay for the option, let's say a call, right? Whatever I pay for that call, that's the most I can lose on. So if I spent, let's say, $1,000 on that call, I already know, hey, if my R is $1,000, the worst thing that can happen is I lose an R. I don't care if the thing keeps dropping another 20%, I still only lose an R. So it takes a lot of that stress off. Whereas if I was with shares, right, and I had that same amount of shares with that same R, I might be having $20,000 on the table, or $30,000 if it went to zero, of course. But I feel like that's a lot more stress to me. I'm able to manage myself a little bit better with my risk and still be able to have enough weight on there and enough leverage to be able to make some really good money on the upside when the thing finally does reverse in a few months and head higher. So that's what I do. I do all absolute zeros. I do leaps. I'm buying options. For me, I'm buying them a year or two out, and I'm going no lower than a 40 delta. So I'm pretty much just barely out of the money every time. That's my setup, and I can sleep at night because I have a defined risk. I don't care if Armageddon happens and I'm like, well, I thought this would be the bottom and I was wrong by 30%. It doesn't matter. I'm not going to be blowing my account up with this strategy.
All right. So you just gave away some really good tips. The 40
Huge
delta, right? So did you say you're looking for something below 40 delta? So 40 delta is your cap?
40
Nothing
delta
higher?
is the lowest I'm going to go. So
Oh,
at
the
the
lowest,
money's,
okay.
let's just say it's 50, right?
Yep.
I'm going to go 1 strike, maybe 2 strikes out of the money. So if my buying area was $100 and the price is coming on down, it hits that $100 mark, I'm going to buy like the 105 call or the 110 call.
Gotcha.
Just something out of the money.
Gotcha. 1 to 2 years. So you guys, hopefully you're listening in because he's giving you all the good stuff right now.
Good stuff. I'm an open book, man.
What are you buying right now? Can I ask?
Yeah. I just got into Unity. This low IV market is just perfect scenario for the strategy. Most of the time on these massive pullbacks, you're getting really IV spiking fears coming in, but relatively speaking, we've had very low implied volatility. So these options are so cheap. So let's see, I got into Dash last week.
That's a good one. Yeah, that's a really
great
good
one. And again, just waiting for it to come down, finally hit my alert, and it's already rampaging. My favorite one would be Tesla so far. That was one where I did call the bottom so far. It might roll back down, which I'm prepared for, but I doubled the cost of my leap in like 2 weeks on that option because I bought it when everyone was thoroughly convinced Tesla was going to $100, right? The daily just like, it was the worst looking chart you could have ever seen. But you zoom out to that monthly and you go, wow, this is just pulling right back to a monthly support. And so I already had that planned. Alert went off, bought it, didn't look at my computer, just said, you know what, I'm losing on this for a few months, show up, look at it a week later, and I'm like, wow, I'm up massive. And so been selling covered calls against it.
Cool. Now, I talk about this with my mentor students a lot about feeling very secure in what you're doing. And that comes with having a complete understanding of how the markets actually work, understanding the ebb and the flows, understanding support resistance. And when you start to recognize and put all that together, it makes it so much easier for you to sleep at night during these pullbacks, right? What was the pivotal change, I guess, in you to be able to go from that, oh my goodness, the sky is falling, to, no, this is all good? Do you remember that pivotal moment when it just kind of clicked for you?
I would say a pivotal moment was a pullback that we had quite a few years ago. I don't know the exact date or whatnot, but I was trying to do this and my emotions got the best of me. And so first it was, okay, I'm going to buy it at $100 and it's currently at 180, right? And then it starts to go to 190. I'm like, oh my gosh, I'm losing out. This thing's going to go 300 and then it goes 200. And I buy it and I bought it at the top and the thing went all the way down to $100. I'm like, oh, I had a plan. Didn't follow it. So that was first part. And then when I finally did get in at $100, of course, it starts heading a lot lower. It starts going to 95, 90. I'm like, oh, I'm down. Just get out. This is just stupid. And I get out and then reverses. And then now, it goes to 220 5 months later. So that was a pivotal point for me to realize that my emotions took over. My mind knew what to do, like you said, how the options work. My mind knew what to do, but my emotions got in the way and kind of threw logic out the window and caused me to do a whole bunch of stuff that made me lose money and miss out on a lot of money. I planned that for months and I ended up just butchering it, throwing it out the window, and then looking at it 6 months later, like, oh, what could have been? I would say that was a pretty big pivot point for me.
Yeah, for sure. And you know what? I'm venturing to guess that everybody, including myself, has been there. Yeah. Absolutely. How about you, Dan?
All the time. Especially when I started getting trade, like I've calmed it down a lot, but one of the biggest things was that FOMO of like, this is where I want it, but look, it's moving. People are talking about it, and I'm like, well, if I could get in here and then it moves like 20%, then that's a good trade, and that's fantastic. But then it would always like dip down. I was like, why don't I just wait? And the waiting thing, I in the live trading rooms, I've gone over this in detail as far as that typical thing. People seem to get caught up too much in the intraday, like the intraday time frame of like this smaller move. And if you're day trading, that's fine. But where you're taking that trade intraday matters in a bigger picture. It's if you're looking at some kind of just one little blip on the map, you're like, this is the greatest place I could ever be. And then you start to expand out a little bit and you're like, oh wait, there's a state, there's a country, there's the earth, there's the universe. And you're like, so where is this exact location? Like how relative is this to everywhere else? And so you planning your trades off that monthly, I love it, because a lot of times even the furthest people go back is a daily chart. They don't even venture to the weekly or anything like that. And while you can still make money doing it, and if you're quick enough, that's fine. But if you're waiting for the price, if you're like, I like Tesla, like you said, I like Tesla, but this is my price. If it goes up to $3,000, well, I mean, I'm sure there's a whole bunch of other stocks in the stock market that you could possibly trade, so you don't have to go chasing everything. And that was a huge pivot. So I'm glad you kind of went over that. Did you always do the monthly chart, or did you start on a daily or weekly, or what got you to the monthly chart?
Man, I started on a daily. Didn't really look at larger time frames. I think like most people. When daily levels, so like the S curve, right? You know the S curve, and shouldn't break a higher low. And when the daily would break a higher low, and I was like, oh, that should have held. And then it just starts falling. I kept looking for answers of, when is this thing going to bounce? I felt so lost. And it wasn't until, like I said, back trading, I looked at the weekly and I said, oh, wow, it bounced off of that weekly support. Even though it broke 3 daily supports, but it bounced off the weekly. And then times where the weekly supports would go down. I mean, COVID was a prime example. Look at the SPY on COVID. SPY, I remember thinking, zombies are coming tomorrow if we break this low. And the very next day we broke, and it's just like, it's the end of the world. I don't know what's going to happen. And if you go to a monthly chart, we wicked right off of the next monthly support. It was pretty simple. And so, yeah, it's just bouncing out to a bigger time frame through back trading is what's gotten me to expand my vision. Like you said, I lived in my little town, and I realized, wow, there's a world out there. And it really helped me put things in perspective. And it really keyed in my entries. I use it for everything. I use it for day trading. I use it for swing trading. And that sounds weird, but when you get an idea of, wow, you've had 9 bullish months in a row, and this swing trade is just so perfect, having a bigger perspective will say, okay, well, I could take this trade, and that's totally fine. It might go up for another 12 months, right? But it will pull back. And so I might take my profits a little bit sooner, or I might just say, you know what, I probably won't take it up here. But if I can also find a stock that looks fantastic on a daily, and I jump up to a monthly, I'm like, wow, we've actually pulled back to a nice monthly support. That gives me even more confidence in that swing trade investment, even a day trade, to say, I love this gapping on a day trade, because the monthly is also telling me this is a great buying spot long-term. So I could see why more people would be piling in behind the sentiment.
And actually that's really key. So, if you're a day trader out there right now, just remember, there's more than just day traders. There's more than just retail traders. If you're a swing trader, there's more than just swing traders out there. We have these blinders on that we need to take off and recognize that there is a bigger world. There's institutional traders, there's retail traders, there's long-term investors. The bigger time frames that we go creates a bigger opportunity for more people to be looking at that level, looking at that. That's why the bigger time frames, they work better, right? You hit a big monthly level, you're encompassing day traders, swing traders, investors, long-term, et cetera, right? So a very key point that you're bringing up now. Now, I do want to touch on something that you said earlier, and that's called the trap. Now, for all you new traders out there, I can tell you right now, when you're entering, and when you're getting stopped out of a trade, that's usually where Tony's getting in, okay? So do you want to talk a little bit more about that? Give a little bit more of an explanation of what a trap is?
Yeah, I love traps, because especially when you're day trading, you're looking for sentiment, right? The market will tell you what it's going to do. You don't have to wait for confirmation. Your confirmation can come much earlier. In fact, it can come hours earlier than what you're looking for. And I mean that by traps. I look for traps to see who's immediately wrong, right? If we open up and within 10 minutes, everyone got in bullish, it's just going to the moon. And 5 minutes later, it's slammed all the way down, took out all their stops, and it's still free falling. It's a pretty good idea of, wow, the bull should be strong right now. The early morning is the strongest time, right? That's technically when you have the most volume. And of course, I say this conditionally, everything works all the time. So it's not like, well, every single time I see that, it'll work perfect. That's not how the markets work. But it is a good read of sentiment. If bulls are pushing and then 5 minutes later they are getting all stopped out and the bears are jumping onto the bandwagon and it is reversing hard, that's what I call a trap. And it's usually something that happens very quick. New traders can get used to this. Have you ever gotten into a trade? Let's say market's been moving up really, really well and it's been consolidating sideways and you say, you know, I'm going to buy the breakout up here. It looks fantastic. And as soon as you get filled on the breakout, it immediately reverses and starts screaming down, right? And what's your first stop? Get out, right? It either hits your stop or you move your stop up to get out. And so whenever you sell that, it causes it to go down even more. And that's what the trap is. So like you said, whenever your stop was, that's where my entry normally is, because I'm playing the game of, I imagine new traders are probably getting in right now. Why? Because it looks so good. It's already made a big bullish move. It looks so safe. You know, the last time it consolidated, we broke out, and then an hour later we consolidated. Why wouldn't we continue higher, right? And so I'm playing that game. I am buying your shares off of you, or, you know, I'm shorting shares from you and reversing it the other way. And so that's kind of what I'm looking for, the trap. It's a really good indicator of how strong something is or how weak something is. I love a trap, especially in the first 10 minutes of the market. That's what I look for in a lot of my trades. And the rest of my trades happen about 3 hours after the market's open. And when the trend is most likely done for the day, right? If you, again, zoom out to a weekly and you'll see you've had a great move, but you're hitting your face into a weekly EMA, right? Just zoom out a little bit more, get a bigger perspective and say, I could see why someone would take their profits here. And that's why I'm saying, okay, I'm using these things to show, all right, I'm going to go ahead and short this because odds are I know new traders are probably going to take the break out of this bullish and I'm going to reverse this and head lower because the bigger time frame is telling me this move is probably done.
Yeah, for sure.
I just need a second real quick. I'm just trying to get the mental picture of what this is like the human embodiment of what a trap is Tony. So I need to process that. It's good to put a face to the name, right? So,
who you gave your money to?
Yeah, exactly.
I'm
gonna send you a bill, Tony. But yeah, no, absolutely. And I know you mentioned the two indicators that you do use is volume and RSI. You say you kind of live with those. Is there any other indicators you specifically are using to set these kind of these type of trades that you're currently doing?
Yeah, I love another one too. I forgot to mention was EMAs. So there's nothing magical behind these. Again, there's nothing magical behind any indicator. But if you can use it to help give you a little bit more insight of what you're already planning on doing, it helps a lot. So I love the 10, the 20, the 50, and the 200. That's just what I've always done. I don't know why. There's nothing magical behind it. I love EMAs. EMAs are that rubber band. The price will always want to work to that EMA. So if you're very extended, and that's a big part of my reversal plans on the daily, weekly, monthly, even on a 5-minute, if you start getting a big move down and on a daily, you zoom out to a daily and you say, wow, that's a great support zone. We've already had a big move down. We're bullish overall. And you go to a 5-minute and realize that you're very extended from the 10 EMA. That's a pretty good sign that combined with a few other things that you might be reversing and going back to that EMA. A few things why it's on my mind. A few more things you might want to consider is that I'm trying to think of a good way to word this. I don't butcher this. Don't lead someone astray. You want to manage your expectations, right? You want to manage where your targets are. When I get into these reversals, I'm not trying to have it reverse and go back up across the high of the day that we filled this morning, right? My targets are back into those EMAs. It's not a very big move. But because I'm able to get in at a good entry, I have a really good risk reward. And so having the right expectations and the right targets really increase your odds of being profitable. I think too many people are going to go for the 3R trades or the 2R trades every single time. And I go for the 2R trades, but I read sentiment along the way to tell me, I'm just going to cut this at 1R because I'm not liking what I'm seeing. It's not as strong as I expect. And so the scary entries have a lot of positives. And one is that if you're right or wrong within 10 minutes. And that's why I love playing traps. A trap is supposed to go down and reverse and shoot higher. So if it goes down and doesn't shoot, well, I know I'm probably going to get stopped out. I'll go ahead and lose small. Having the right expectation of realizing, guys, this is not a high percentage play. I probably have a less than 50% win rate on this thing, but I'm still very, very profitable because I'm able to read sentiment quickly. I'm able to know if I'm right or wrong fast. If I'm wrong, I go ahead and exit small and I'm losing like 0.4 Rs, right? When I'm right, I'm making 2 Rs in 10 minutes, 15 minutes sometimes. It's going to work fast if it's going to work, and I know right away if it's not going to. So because I don't have a very good win rate, I still am very profitable since I'm only losing a couple bucks, but when I'm winning, I'm making $20, right? Think about it like that. So having the right expectations, the right targets, and then have the right mindset, because get used to losing. If you're going to play reversals, you've got to get used to losing. Again, it's all that mindset. You have to have the correct emotional control, and that comes from having a plan and having the right expectations going into it of, hey, I'll probably lose on this trade, but that's okay. I've back traded this strategy. I know what I'm doing. I know what I'm getting into. And you can be a very profitable trader as long as you control those emotions and don't get down on yourself.
Absolutely. I mean, you're counter trend trading. That's what you're doing, right? So, no, for sure. Now, do you have a specific pattern that you like?
A specific pattern? I mainly will play off of double bottoms. So, but before, not the breakout of the neckline, I'm buying the double bottom when it still looks like a bear S curve. So that's what I'm looking for on a day trade. I am looking for those bears that are excited to short that support that just came in, right? It's so hard without a chart. I'm just drawing.
Yeah, no, I get it. Yeah. Imagine an H. Imagine an H.
Yeah. So exactly. You're coming down, you hit a support zone, you bounce back up, and then you roll back down to that support zone. That's where my entry is. Right below that support zone, shorts that don't know what they're doing, moves already done, most likely. They're down there. That's my favorite setup. That's what I'm looking to do, is that reversal. So a nice bullish stock that's just having a bear day down to support, something that's really extended, and I'm looking to be the trap down there is my favorite setup.
Perfect.
This is probably, we only have a couple minutes left, but probably a detailed question. It's maybe too detailed for you to get into, but the best you can. I know you said you're trying to catch on the monthly charts certain spots, entries that you like based on support or RSI, stuff like that. So there's a lot of people that are relatively new to options. How do you know how to set the option price? Is there any certain tools or in the broker anywhere that you can find where that exact entry would be?
For me, I don't set up. I actually don't put any limits out there. I wait for my alert to go off, and then I just go ahead and get in at the mid. So I make it pretty simple. All right. Yep. There are ways that you can do that. You can use your broker. I use an analysis tool. Most brokers will have this. So you can type in and say, okay, I know I want to buy like the 110 call because I'm buying it at $100. I'll go a couple strikes out, and it's going to be the expiration for a year away. I know those variables because of the location I'm buying at. So I can plug that in and I can mess around with the price a little bit. There's videos on YouTube of how to do this. But like you said, if I only have a few minutes, I'm going to be quick. I use an analysis tool. You can kind of predict generally where the price that option will be at that price. For me, though, once my alert goes off, the candle is still dropping. I'm not putting my alert in after it's hit that location and then put in a hammer a few days later. Like, that's not what I'm doing. If you're waiting for confirmation, you're going to be paying way too much on your options. You need to be buying these options when everyone is still thoroughly convinced this thing's going to go to $10, right? If you can be ahead and play ahead, you'll get filled at a great price. And so my alert goes off. Okay, there's my area. I get in. I'm not trying to get the bottom. I'm not trying to get the best price. My main thing is I just want to get it when it's still falling. And so nice and simple. My alert goes off. I put it in my broker, get filled, and try not to look at it for 2 months.
Well, that's awesome. That is awesome. Yeah. I think we're going to have you on the show again in the future, because we could talk a lot about a bunch of different other things, but the buying low, it's a tough one. It's a very, very difficult thing for most people, but I think we're out of time, aren't we, Dan?
I think so. Okay. Tony, thank you for joining us. I always get a lot from it, and you do teach mentor groups as well. They always fill up and sell out real quick, as we have 6 in there, and mainly because I buy all 6 spots. So,
no, Dan, you've been supporting me for a while, man. I appreciate it.
Yeah, I need to get as much Tony time as I can. But so they keep a lookout on the Real Life Trading website, reallifetrading.com. Also, for you guys that tune in every single week, thank you. Tracy, thanks for coming back. Always a pleasure hosting the Pivot Podcast with you. For all you guys, make sure that you hit that little thumbs up, like button, subscribe, hit the notification, get the subscribe to Real Life Trading YouTube page. You get the notifications anytime we go live, which is every Thursday, 4:15 to 4:45. You guys are incredible. We'll see you guys all next week.
Bye, guys.